in return for basically deploying $60 million of capital to save the UST peg, they were able to get this incredible deal from Do Kwon himself, who clearly was in that position doing everything possible to save the Ponzi. So
Hello, everybody. Welcome back to WagMe TV. We have a great episode prepared for you guys today. We're talking about a little bit of conflicting and interesting history between Jump Crypto and Terra, Luna, and Do Kwon. So we're going to go into that and going into the history of what happened and why it's so controversial. So I'm going to kick it over to Evan to give us a little bit of a backdrop.
Yeah, absolutely. So, yeah, this was, a story that came out in earlier in May here, and we saw that Jump Trading faced a lawsuit about a $1.3 billion profit from Terra USD. And, I think that one all caught our eyes because we probably hadn't heard a lot of Terra news recently. But yeah, the CEO was accused of violating United States regulations and unjust enrichment in the lawsuit. So let's see what he did. So what we heard was that around May in May 2021, now, emphasis on 2021 here, not 2022. The Luna price was falling pretty significantly. And this was something where Do Kwon needed to be able to keep the price up so that the UST peg stayed at $1. And so what was needed? Well, a huge influx of cash. And where could he get that from? He was able to get that from Jump Trading. And so as you go through the article here, there was the purported scheme involved Jump purchasing more than 62 million UST tokens between May 23rd and May 27th, causing UST's price to artificially rise to $1. And really what we saw was, or what the problem here was the payout that Jump Trading was going to get. So with these Luna tokens, they were going to be able to get a 99% discount from their then current market price. And in the end, that profited Jump Trading $1.28 billion. That's pretty spicy. And that's something where I think it's pretty difficult to sweep that under the rug. But, what we also saw in this article was on May 13th, Bloomberg reported that the United States prosecutors were examining a telegram that was also involving Jump Trading, Alameda Research, and Jane Street Group. So you figure, maybe SBF could have been in that telegram as well, which would add another huge figure to that discussion. So, yeah, this is something where, it's in 2021, so it's not in the collapse of 2022. And, really when we look at the Terra Classic price, we could see this dip that they were trying to avoid. So, here on CoinMarketCap, we have Terra Classic, and we see Terra going from $16 here, right in this section, down to, $4-6. And so you saw this huge decrease in the price. And this is really when Jump Trading came in and was able to artificially increase the price of Terra, which, as we've talked about in previous videos with Terra and UST being an algorithmic stablecoin, was able to keep the price of UST pegged at $1. So pretty interesting. And I think it's pretty important here to say how, without this influx in cash here, you wouldn't have seen Luna and UST, this algorithmic stablecoin, continue to be successful to then go on to this huge crash in 2022. So, it was something where maybe it delayed immediate disaster, but, you feel like it probably caused a lot more in the end. But yeah, I'd be very interested to hear your guys' thoughts on this.
yeah, I think, there's a number of alarming things there. First is what you just pointed to, where this actually points to the fact that, everyone seemed to think that this was a surprise when this happened in May of 2022. in reality, what we see is, not only does the mechanism start to fail a whole year before that, but it seems like there was a calculated response in order to artificially, make it succeed for that time being. So really, the one alarming thing is that they clearly knew that this mechanism was not going to work long term, and did some shady dealings under the table, it looks like, to kind of kick the can down the road, if you will, which obviously later led to an even bigger collapse of the crazy Ponzi scheme. The other kind of crazy thing that stood out to me, is the deal that was actually struck with Jump Crypto. So just to give the listeners kind of some context around how these deals are usually struck, the premise of the deal here is not actually the issue. It's the terms of the deal that are insane. So really what happens here, if you're a crypto company that has a token that you're looking, liquidity is the name of the game in DeFi and in crypto. And so obviously these market makers, a lot of crypto companies are coming to them being like, hey, can you be the market maker for my token or for this particular asset, for my stable coin, whatever it might be. And the way these deals are usually set up is through what's known as a loan option model. And so what you do is you basically give a set of tokens that you want, the market to be made on to the market maker, and you loan it to them. Now, by doing that, they take that supply and they use, their professional, trading infrastructure and market making technology, all their expertise to make markets for you on whatever exchange you want, whether that's, Uniswap, anything from a Uniswap or another DEX to, Coinbase or Binance or whatever exchange that you prefer, right? And so in return, what they do is they have a call option on your governance token, right? Whatever the volatile token of your project is, they have a call option on that at a predetermined, very low price. And so in the event of, let's say you have an agreement for 2 years, in the event that your token spikes in price, they're able to exercise that option and basically make like riskless profit from the fact that they're able to purchase your token at a very low price. Now, what we see happen here, usually it's, they have a call option that's out of the money, so it's trading like the strike price is above where your governance token is. Right here, they actually gave a 99% discount to what the current market value was. So for jump trading, I mean, this is a complete, like, this is the sweetest deal you're ever going to get, right? You basically have an option to buy tokens at a 99%
That's
discount.
100x right there, right?
Easily, right? And who
Yeah.
knows when they sold it? It seems like they may have waited a bit to actually unload their full position, because it was on 60 million or whatever tokens. It ended up being, actually I'm not sure of the exact math, but generally speaking, you're right. Like it's a huge multiple on that trade. And so in return for basically deploying $60 million of capital to save the UST peg, they were able to get this incredible deal from Do Kwon himself, who clearly like was in that position doing everything possible to save the Ponzi. So those are my thoughts. Curious, Armada, Garcia, what you guys think?
I mean, I think the biggest point here, at least for me, the biggest takeaway, and you alluded to this earlier, was Do Kwon had such a big following, had such a big backing because he was known as like the guy that came up with the algorithmic stablecoin that worked, right? And so now we understand that it really didn't work, and he had to prop it up for essentially a full year. He had to prop it up, and probably before that, it was struggling. And he probably had who knows what other methods he had to go through to actually keep it alive. And so I think it just plays into this narrative of you have to be careful of who you're trusting, right? Whether it's Sam Bankman-Fried or Do Kwon, like, anyone who's kind of touting, hey, I've figured it out, or I've figured out a way to address this big problem. You have to do your own due diligence on that and try to uncover what's going on. But
Well, you
to
would
me, it's
think
just
that
so
maybe
interesting.
somebody saw those transactions go through, right? It's a public
It's a
blockchain.
blockchain, yeah, exactly.
Yeah, you would think there would be some, whale trackers out there being able to see that transaction. So,
It's possible that this didn't happen on a public blockchain.
oh, interesting. Okay.
It's possible that they were using a centralized exchange or something to
Or like a
deploy the
VC
60
funding.
million. Yeah, to like try to save the peg. But then again, I'm not really sure.
That's fair.
It doesn't go through it
Yeah.
in the article.
And I mean, either way, to piggyback on what Sia was saying, like, you have this algorithmic stablecoin that's being propped up by all these big figures, right? You're seeing Jump Trading, you're seeing Jane Street, you're seeing SBF, you're seeing Alameda. It only perceives a little bit more confidence to the rest of the public, right? They see all of these individuals who they see as kind of, these awesome players in the crypto space all investing into this project, into this program, into this organization. Why wouldn't you do the same, right? And so it is interesting how this kind of like faux stablecoin like organization kind of continued to be propped up along the way because of just the sentiment around it from the entire society. And so that just again goes to show like you don't know exactly who you can trust out here, so you just really need to do your due diligence, do your research, and all of those. But it is just crazy to think like, how many other issues did they have along the way that just weren't, released to the public? And how did this, obviously, and the investments from these organizations impact the society and how we all thought about it? And then the next question I would have is, for Jump Trading, for Jane Street, right? Did they actually believe in this project? Or did they just want to make a quick buck, which they were getting a 99% discount on this token for, right? And you'll never really, I don't know if we'll ever really know the answer to that, but it is an interesting thing to think about.
Yeah, that was probably the easiest 20x that they've ever had. So they put in 60 million, got it back 1.28. Yeah, that's pretty easy. And I think that's a great point. There's no way that they had that belief. It's especially when you see the price dropping, more than 75% in the span of, a couple weeks. That's a ridiculous place to hop in. And so, I think it's fair that they're probably getting some regulatory backlash and being investigated for this stuff, because you're totally right. You're instilling confidence in a project that probably shouldn't have it. And as we saw down the line, it definitely should not have had it. So I think that's a great point, Mata.
I think that wraps things up for today. Thank you. I mean, that was super, super insightful. I think it gives a little bit more background into what actually happened leading up to 2022 with Terra Luna. Clearly, the algorithmic stablecoin wasn't everything it was touted to be, and there were warning signs previous to that. So appreciate you guys diving into that. If you enjoyed this content, please like, comment, subscribe. We always enjoy the comments, responding to those, and hearing your feedback. So we'll catch you on the side, guys. Wag me.
Wag me.